Hello students, welcome to Peregrine Learnings. So in the last video, you have seen the basic concepts, features and different types of capital accounts maintained by the partnership firm. So in this video, we will do the practical questions relating to the partner's capital account. So as I have told you that partner capital account is in two can be maintained in two ways. One is fixed capital method and one is fluctuating capital method. So we will do the questions how to maintain capital account in fixed capital method and fluctuating capital method. So we'll start with illustration 1. Okay, so let's just start with illustration 1 now. Samir and Yasmin are partners with capital of rupees 15 lakh and 10 lakh respectively. They agreed to share profits in the ratio of 3:2. So their capital was 15 lakh and 10 lakh and profit sharing ratio was 3:2. Show how following transactions will be recorded in capital accounts of partners in case of capitals are fixed and capitals are fluctuating. Okay. So these are the adjustments during the year. Additional capital contributed is 3 lakh. Interest on capital 5%. Interest on capital is 5%. Drawings 30,000. Interest on drawings 1,800 and 1,200. Salary 20,000. Commission 10,000. Share in profit for the year 2019-20 60,000 and 40,000 respectively. Okay. So now what will I will just we will start with fluctuating method. Okay. First is fluctuation method or fluctuating method. Okay. So in fluctuating method, we will maintain, or we can just start with the fixed capital method where there are two accounts, right? Okay. Fixed method, fixed capital method. So in fixed capital method, how many accounts are maintained? One is capital account, one is current account. So capital account remains unchanged. Only it will change only when the partner have bought capital or it has withdrawn the capital, and all the adjustments during the year are made in the current account. Okay, so now let's just start with the capital account. Partners capital account. Debit, credit. Okay, so let's go through the question first. How much capital they have? 15 lakh and 10 lakh. We'll have to maintain two different accounts for two different partners. One is Samir and one is Yasmin. I'm just writing this small. Please don't follow in exams. Please write entire name, particulars, amount, particulars. Okay, amount. Sorry, I'll just erase this. Amount. Okay. So how the capital works? Capital account is known as the liability account in the partnership firm in the books of accounts. So there are two accounts. There are mainly four accounts which are basis which the accounting happens. I will quickly go through the basics of the accounting so that you will understand how the debit and credit entries are recorded. So one is liability and one is asset, income and expense. Okay, so liability and income, understand this, please focus here. Liability and income, okay, how they are recorded. So when it comes to liability, suppose there is increase in liability of the firm, it will be recorded in the credit side. There is decrease in liability, it will be recorded in the debit side. What do you mean by increase in liability? In partners and partnership firm are considered to be two different people, two different legal entities. So when I am talking about partnership firm, so I have partners. So partners will contribute to the partnership firm, suppose 10,000 rupees. Okay. So what happens to the partnership firm? Forget about partnership firm is getting the money or not. Here you need to understand this money which I am getting now is a liability which I have to pay back to the partners in the later stage. All right. So there will all whenever the partner gets amounts to the partnership firm, it will come on the credit side. So whatever the balances are there, they're always on the credit side. Okay. So what happens when there is a partnership firm? Okay. And then there is a partner. And suppose partners now he or she is getting 10,000. Later he will get another 5,000. Again the partnership firm has a liability to pay that 5,000 to the partner. Okay. So again it will be on the credit side 5,000. How? Bank account. So if it is introduced during the year, it will be bank account. If it is introduced past year, it will come in the balance side. Okay, so this is the second transaction. Now what happens? There is something called drawings. So what happens in drawings? So drawings, there's a partnership firm and there's a partner. So the suppose partnership firm may the partner has invested 15,000 rupees. Now partner needs money. So from the partnership firm, it withdraws 3,000 rupees. So I am in need of money. I'll take 3,000 and I will use it for my personal use or whatever use. Okay. So what happens now? The firm contribution will come down to 12,000. So the partnership is no liable to pay the 3,000 rupees. So what is happening? The partnership's liability, firm's liability is coming down. All right. So this will come on the debit side. Drawings will always come on the debit side. Okay. Now comes interest on drawings. Interest on drawings. Suppose there is a interest of 150 rupees on 3,000, which is liable to be paid by the partner to the partnership firm. Okay. Again, partnership firm, if suppose the partner is not paying that 150 rupees, again partnership firm don't have to pay that 150 rupees to the partner. You're understanding my point? Drawings and interest in drawings both are payable by the partner here. All right. So since it is payable by the partner and the partnership firm's liability is coming down, we can just write it here, interest on drawings. All right. So here what are the adjustments? So I will just, for now we will see how the capital account works, liability. Later I will explain you how asset and income and expense adjustments are done. So just erase this. Okay. Right. Right. So, okay. So now, so I will just write an arrow mark for you guys to have a better understanding. So capital account, increase in capital will be on the credit side, decrease in capital will be on the debit side. We will do this for 2-3 questions so that you are familiar what are transactions are recorded in capital account and what are transactions are on the credit side and on the debit side. Okay, so capital of 15 lakhs in by balance brought down Samir 15 lakhs and Yasmin 10 lakhs. Okay, next additional capital contributed. So this is a capital contributed, it will come here by bank account. Okay, because it is bought by cash, so that's why 3 lakh and 2 lakh. Interest on capital drawings, interest on drawings will not be part of the capital account because only additional capital and withdrawals drawings will be coming in the capital account. Not sorry, not drawings. If there is a withdrawal, withdrawal of the capital. So how much is the account? 15 plus 3 lakh, 18 lakhs. 10 plus 12 lakh. Okay. 2 balance, not 2. You can just say balance carried down. No need of 2. 18 lakh and 12 lakh. So this is my capital account. Now next come to partner's current account. Okay. Now let's start with current account. Sorry. Samir, Yasmin, particulars. Samir, Yasmin. So here also it's the same thing. If it is increase in capital, it will be on the credit side. Decrease in capital, debit side. Okay. So first is by interest on capital. We'll see the adjustments first. Yeah, interest on capital. On capital. So how much is, we have to calculate how much is the interest. We will do the workings. So workings. So how much is the capital? Samir, 15 lakhs. 15 lakhs into 5 divided by 100, which will be equal to 75,000 plus additional capital. Okay. How much is the additional capital? When was the additional capital brought? 3 lakh bought on October 19. 3 lakh into 5 by 100 into how many months was the capital there in the partnership firm from October 19. So October, November, December, Jan, Feb, March. 6 months, 6 by 12. Okay, so 3 lakh into 5% if I do, to 7,500. Okay, so the total for Samir is 7,500 plus 75,000, which is 82,500. Okay, and for Yasmin also same calculations. 10 lakhs into 5 by 100, which is 5,000, sorry, 50,000. And additional, how much was the capital? 2 lakh into 5 by 100 into 6 by 12. 5,000. So total it is 55,000. Okay, this is for Yasmin and this is for Samir. 82,500, 55,000. Okay, interest on capital. Drawings will be on the debit side. Drawings. Why? Because drawings is the money taken out by the partners. So the liability of the capital decreases. Drawings during the year 30,000 and 20,000. 30,000, 20,000. Okay. Interest on drawings also on the debit side. 1,800 and 1,200. Okay. Next, all this will come in the credit side. Salary, commission, everything is payable to the partner. Okay, nothing is payable by the partner. Salary is paid to the partner, commission is paid to the partner, and share in profit is also paid to the partner. So, salary, Samir is getting 20,000, commission 10,000 and 7,000, share in profit 60,000, 40,000. Okay, why? Why all these adjustments are on the credit side? Because all this will be paid by the partnership firm to the partners. So all this are paid by the firm. Paid by the firm means the liability of the firm increases. So now if I have to pay something to someone, my liability increases. So that's why it's coming on the credit side. Okay. So now let's just do the calculation. Any other adjustments? Let's see. All these four are done. 1, 2, 3, 4. 1, 2, 3, 4. So the total is 80,000, 20, 10,000 and 16, 60,000, 1,72,500. And here it is 1,02,000. So drawings is how much? 1 lakh for minus, if you do, the balance will be, balance carried down will be 1,40,700 and 8,800. 1,72,500, 1,02,000. So this is the partner's current account. Okay. So now we will start with fluctuating capital method. So in fluctuating capital method, we have only one account to be maintained. Credit. All the adjustments relating to the capital account, relating to the partners, will be done in the capital account itself. By balance, we will see from here only how much is the balance. 15 lakh and 10 lakh. Okay. 15, 10 lakh by bank. Why? Because partners have introduced the bank capital. Okay, 3 lakh and 2 lakh. 3 lakh. I'm showing you the shortcut. You don't have to struggle. Okay. So next is by interest on capital. Interest on, you don't have to write by here. Interest on capital, 82,555,000. Next is salary, commission, share and profit. Salary, commission, share, profit. How much is the salary? 20,000 to Samir. Commission, how much is the commission? 10,000 and 7,000. Okay, 10,000, 7,000. Share in profit, how much is the share in profit? 60,000 and 40,000. 60,000, 40,000. Two drawings, to interest on drawings. Since we have already done this question, so I'm not explaining you each and every adjustment. I'm just copying all the adjustments. 30,000, 20,000, 1,800, 1,200. Okay, 30,000, 20,000, 1,800, 1,200. So now we'll total this. We'll just say balance carried down here. The balancing figure. So 15 lakh, 18 lakh plus 82,500 plus 20,000 plus 10,000 plus 60,000 will give me 19 lakh 72,500. Yes, 19 lakh 72,500. And then 12 lakhs, which is 10 lakh plus 2 lakh, 12 lakh, 12 lakh 55,000, 12 lakh 55,000 plus 7,000 plus 40,000 is nothing but 13 lakh, 13 lakh 2,000 minus, so now 19 lakh 72, 19 lakh 72,500 minus 30,000 minus 1,800 will give you 19 lakh 40,700, which will be here 19 lakh 40,700, and here 13 lakh 500 minus 20 and 1,200 will give me 12 lakh 8,800. So that's all for today. So this is how you prepare the partners capital and current account as well as capital account under fluctuating capital method. So I hope you like this video, students. Going further, we'll do more illustrations so that I will cover all the adjustments relating to partners capital account. Thank you.